Dear friends, welcome to Weekly View on Markets. Market ended this week with loss of 2.5%. Broader markets lost up to 4 to 5%. There was selling across all sectors as all five trading days ended with losses. Trump announced 100% tariff on branded pharma products, which adversely affected the market sentiment. News coming from US is impacting our markets week after week as it is likely to impact trade and business and subsequently corporate earnings. Markets are expected to remain volatile till trade agreement is signed with US and some certainty emerges on the trade tariff. Also, high market valuation and slow earning growth of the companies is a worry for the markets. Technical charts look weak in the short term, and some more short term pain may be left in the markets. But bad times are the best times for long term investors as stocks and mutual fund unit prices are available at lower levels. When time is bad, the prices are good, and when time is good, the prices are bad. So that is why it is always advised for long term investors to look for investing opportunities when times are bad. That time prices are good because of the market correction. Now let us look at the performance of indices. Nifty closed at 24,654 with a loss of 672 points. That is 2.65% loss for the week. Bank Nifty closed at 54,389 with a loss of 1,069 points. That is 1.93%. Mid cap index lost around 4.6%, that is 2,715 points. A big correction in mid cap index closed at 56,378. Small cap index corrected even more, corrected 5.10% with loss of 943 points and closed at 17,560. India VIX has jumped. That means there is a panic in the market. India VIX has jumped, that is the fear index has jumped by 14.54%. It is at 11.42. Now let us look at sectoral performances. Almost all the sectors ended in the loss, and the losses ranging from almost 7.86% in information technology up to 1% in some of the sectors. So the realty sector, pharma sector, oil and gas sector, healthcare sector, defense sector all lost around 5%, between 4.5 to 5%. Manufacturing sector, public sector companies, media, auto sector, energy sector, FMCG sector, infrastructure sector, consumer durables, NBFCs all lost between 2 to 3%. PSU banks lost around 1.84%. So there was selling in all the sectors and hardly there was any buying activity in this week. FII sold huge quantities during this week and DII could not match FII selling. That is why the market has fallen during this week. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see market is trading in this range for quite some time. This range started somewhere in May 2025 and till now it is trading in this range. Whenever market is coming at around 24,300 level, we see buying coming in. And whenever market reaches 25,250, 300, the selling is coming in. And in two times it has slightly gone above, but at higher level market is not able to sustain. We see selling coming in at one or the other reasons. So we can look for support level of 24,400 in the coming days if we see some more correction in the market. It will be the level where short term investors can look at buying. This is the chart of Nifty mid cap index. Mid cap is index is trading in a range. The range on the lower side is 56,300 and on the higher side it is 59,600. So it is trading in a range of around 3,000 points. Whenever it is coming at the lower end, we see it is going up, and whenever it is going to the higher level, we see selling coming in. But if we look at the whole chart structure, it looks like the chart is making lower tops and lower bottoms. And here the chart is likely to make a kind of double bottom. Double bottom is a bullish sign. So I expect Nifty mid cap index to pick up if it touches around 25,400 levels. This is the chart of Nifty small cap index. Small cap index is also in a range. The range is 17,400 on the lower side and it is 18,300 on the higher side. Only on one occasion it has gone above this. It went up to 18,500 and selling has come. So if it comes at around 17,300 to 17,200 level, that is a good level too. This is a chart of Bank Nifty. Bank Nifty also in a range. On the lower side range is 54,300 to 400 and on the higher side the level is 57,000. So Bank Nifty has been making a lower tops and lower bottoms. So this looks that the intermediate downtrend is still intact, and if Bank Nifty comes around 53,600 level, that will make a double bottom and we will see a bounce back from there because double bottom is considered to be a bullish sign in the market. Now let us look at some of the macroeconomic fundamentals of the market. India's macroeconomic fundamentals continues to remain good, but somehow it is not translating into good corporate earnings. That is only the worry for the markets. RBI forex reserves is at 702.5 billion US dollars. It is quite steady during this week. Forex rate is at 88.72 rupees per dollar. Dollar index is at 98.37. Brent crude price is at $69.75 per barrel. Crude has slightly gone up during this week by around $2. But as long as it remains at below 70, it is quite good for India. Gold is touching record highs. It is at 1,13,766 for 10 grams 24 carat. So what is driving the gold prices to the higher levels? It is the gold demand by central banks, RBI, London central banks, US Fed, all reserve banks of different countries, they are buying. There is some kind of de-dollarization that is happening. Earlier, central banks used to have their reserves in dollars. Now, because of various geopolitical factors, the gold is called a safe haven investment, and central banks somehow are moving away from the dollar. This is indicated by the dollar index. Dollar index used to be at 115 to 116 level. That was the top. From there, it has come down to 98.37. That means the demand for dollars globally has been coming down over the years, and that money is moving into the gold. So because of this one global uncertainty and de-dollarization is making the gold prices higher because of the huge demand from the central banks. FIIs have sold 19,370 crore during this week. Domestic institutional investors have bought 17,411 crore in equity this week. So heavy FII selling was not matched by DIIs. That is the reason we have seen correction in the market during this week. Core sectors growth data for the month of August has come at 6.3. It looks quite a good growth figure, but it is due to the low base effect. If you go to the August 24 figures, the core sector growth was almost nil or negative. So on that base, we have recorded 6.3% growth. But really, is it a good growth? May not be so. Trump imposes 100% tariff on branded imported medicines. This news caused a big fall of 1.2% in the markets on Friday. So much of the fall on during this week has come on Friday. The markets have corrected more than 1%, and mid cap and small cap corrected more than 2% on Friday itself because of the Trump tariff news. So last week it was regarding the visa fees. This week is about the tariff on pharma products. So every week, so one or the other news that is coming, which is driving down our markets. Charts indicate that consolidation in the market in a broad range, as we see selling at higher levels due to one or the other reason. Trade negotiations with US are in progress. This agreement, if it is reached, will give some uncertainty. It will remove the uncertainty in tariff and provide some certainty about the tariff. That will be good for the markets, and business also can plan their activity. If this huge variations in tariff or the uncertainty of new tariff being announced a week, it has to go. Then only the business are able to plan their production and activities. But despite all this, market history teaches us that uncertain times are the best time to invest in the markets. Again, I am telling, when market is bad, the prices are good to buy. When market is good and investors have good confidence and faith in the market, that is when market has already run up. That time prices are high, it is not good time to buy. So if you have long-term strategy, start picking up good companies at present levels. And many mutual funds also have corrected. They are available at NAVs which were 1.5 year back. At that level, they are available. So it is definitely a good time to invest in mutual funds and good quality stocks with 2 to 3 year horizon. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.